Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for April 26th. You should stick around for the lesson during the coaching on the proper use of MACD histogram and a way to develop the coach's eye for you new guys that are posting. I want to start seeing you do some of this analysis that I'm doing for you. I want you to do that and add that to your charts. So that you can anticipate what I'm going to say instead of waiting to hear what I'm going to say. All right, so we'll start with the 30-minute portfolio review, the usual way, starting with Alcoa. These are all on 30-minute charts. Again, these little red boxes are standard risks that we use based on statistics and manageable risk box and PSAR flips and so forth. The blue box outline is the 10-day high. This is the 10-day low point right here. The yellow box is always today's price action, and I project it forward into tomorrow so we can kind of see what the mechanical entry might be. Tomorrow's yellow zone frames out what the mechanical entry might be. So generally speaking, a price above today's high, we'd probably want to be long. And certainly if it goes below today's low, we want to be short. And so inside tomorrow's yellow zone, we're waiting to see which direction price wants to signal is the preponderance of buying or selling pressure. Whenever we see price in a certain box and we're wondering what it's going to do, there's always some number of sellers who are not in that yet or who have extra money on this side, and there's always some number of buyers. And if we think of RUST, let's see, this thing came into my mind this morning. Urgency, time, R was a reason. Trying to remember what S was. But I had a dream last night that Rust was the right reason, urgency, maybe system. So when you're thinking about buyers and sellers and you're trying to estimate the number of them and the dollars that they have, that's equal to something like the latent power to do work. And the work that they're going to do is push price around. And so you start thinking about what are the reasons people have for buying and selling. And for every person that's in there, you're going to have one or more reasons. They're rarely the same, but sometimes they are. And then all of the sellers are going to have their own reasons for selling. And we forget sometimes that they're looking at different patterns and time frames than ours. And all we know is the actions they take. We try to reason why. We think that if we do enough back testing and have magic indicators that we can predict what they're going to do. It can describe what they're going to do for sure. And then I would remember too that there's always some amount of urgency associated with it. How bad do they want to buy or sell, and how is that reflected in the amount of evidence they need to start taking a position? And then what is the systematic approach that they're using? What are the triggers? And then how much time do they have to be able to make that decision? How long can they afford to wait? How long will it take them to make those moves? How soon does the move have to work before they believe in it? Some of those things. So as we're trying to think of who the buyers and sellers are outside of that market, when the market closed, it was in this. It had left those footprints in that box. And what we know is that we could not entice anybody in that population of buyers to pay a higher price to own it. So there was a lack of urgency on the buyers once it got to this price level. And then there was no urgency for people in it to sell once it got to that level. So by definition, that becomes the boundary of the normal relationship between buyers and sellers as they're trying to estimate what the other person is doing and thinking and might do, and observing how those things manifest during price action in that auction market. So as we're looking at this chart, that yellow zone is representing, today's playing field, and there's no new information available that the buyers and sellers, the composition of those two groups, there's no new information that has changed until it gets below yesterday's low or above today's high, to indicate that now somebody in that pool of buyers and sellers was ready to act beyond the region of today's price. So when you see things like this peak of the RL10 before it rolls over, and then this consolidation zone, well, this was new information that it had left the previous consolidation zone and had gone into the spring and then the winter on its way down. So the red box represents the amount of uncertainty or risk we're willing to pay, believing that if this thing, instead of going down, had gone up, that a price above this level would tell us that the downside doesn't work and maybe it's this. Okay? So just a quick look at how we are reading those charts. So yesterday in Alcoa, we had terminated this long position that we took. We liked this, and we said, well, there's a chance it could do that. Instead, it gapped, so we ended up losing not just the one we risked, but because of the gap, we lost 3 on that. And then we stopped and reversed here with the same risk box, and it closed really well yesterday. Today, it was sideways but closed poorly, and I looked at this as a chance for a revenge trade. I got my 3 to cover those 3, and so I just take that as fair. That's a boxing match, and we hit each other. Oh, yeah, S is the signal. Yeah, that's what it was, Tucker. Thanks. Yeah, the RUST. It was very clear to me this morning on the way in. The reason, urgency, the signal for action, that action is commencing, that they're acting on the reason with that sense of urgency and with a certain sense of timeliness, and how long does it take for that action to unfold, and when did it occur, how much time is left. So there's a lot of information about the time. What time is it now? How long has it been developing? When's the latest they have to act? When do they have to act by? If they don't act by this time, is it too late? So time is a kind of a multi-dimensional variable to be thinking about. Yep, signal. Thanks for reading my mind. You read me like a book, like a comic book. So anyway, Alcoa was that was the revenge trade that gets me back conceptually to break even. So AI, I'm really liking this consolidation here. There was no burning urgency to get in. It's had 3 days of tight action, and I'm ready to go either direction as soon as it comes out of that zero state box tomorrow. No trade today. Caterpillar, same thing. I missed this trade completely. There was that gap up and sell off. I think when it crossed here, or it started breaking here, or it broke there, any one of those 3 was tactically playable. This was the best signal, the best normal signal, because there's your PSAR flip, and that would have given us about 3R that just missed. I'm sorry, that's Ethereum. God dang it. My mouse slipped. So, yeah, Caterpillar, this makes more sense now. Sorry. So Caterpillar, we have the scratch. I took a delayed stop and then a delayed reverse. And then yesterday it closed and I took it right at the edge of the river for about +1. Today it monkeyed around. It came into the station and hit, this felt like a compression, the PSAR and then the rising lows, and then it broke down out of that. So we took the standard risk. That's the same as that risk box. And it closed down here. So we're actually holding 2R on that one and a short position. Cliff, the history of this thing was the big collapse and cover. This was a stop and reverse, gap down for -2, stopped and reversed here the next day, made bank. I was burned by that gap, so I didn't want to hold that. And then today it just continued to fail, and notice the R10 rolls over, so I just reestablished the short intraday, and it closes poorly. And we're holding 1, 2, +3. And I'm ready to add another position tomorrow if that continues to fail. All the metals were like that today. They are in play. CVS. This missed the short yesterday and today. So yesterday's short opportunity was here, missed that, and then that would have been good for the gap down, but really nothing really happened today except sideways. So this almost feels like a zero state. I will be short if it breaks below today's low, which is also the belly of the R10. I have to be long not later than here, a breakout from today, but I'm very tempted to set this up for 72.50 tomorrow and treat that as the yellow zone and get ahead of it in case it takes that out. The target for this to the upside is going to be like 74. So, no trade today, but stalking hard. Dish was the second day of a gap down. Gap down and crush, and then today rolled over. This was a chance to get a second position on, but I was determined to hold that overnight, so I didn't want the extra exposure. So we're holding +2, and that feels like it could really collapse because the MACD is just starting to roll back into winter. Has plenty of room to fail. Devon Energy, short and covered for a one-day 3R. Electronic Arts initiated the short on the K2 to the downside. So what I am noticing here was sideways chop, big gap, harsh fail. Today it recovered into the dragon and then rolled over. And there's your rollover of the RL10. The PSAR has never been in doubt. So that was relatively low risk entry, and it closed poorly, and we're holding +2 going into the close. Again, you don't have to take any of those overnight. If you want 2R, just take 2R. Sleep like a baby. EEM, that's emerging markets, gapped up and then was flat. So this has potential tomorrow to be a COTA 2. So if it can hold right here and break north of the dragon and probably take out the PSAR, which will look like that tomorrow, if it can break out of there, then why not? Ethereum, the short side all day. Mexico, this was another COTA 2 on one of my favorite trading vehicles. So we tried that one. It was a micro gain, stopped and reversed. It got smashed yesterday. And then today continues, and now it's because I've only got the one position in, I don't have to get chased out of this. And it rolls over where it's supposed to and comes through the dragon. So we put the second position on, and it closed so poorly at the low of the day that I'm holding two positions overnight. And this one, which had a larger risk, is about +3. And this one, which was a tighter stop, is also about +3. So we're holding about 6R in total and ready to reinforce that to the downside. The MACD is showing strong winter, left the Red River, and down we go. So I like that short for tomorrow. Brazil, sideways chop the last 5 days. I could be convinced tomorrow to get short. Intel initiated the short in the afternoon. IP covered a 2-day short for about 3R. I wanted to reduce overnight risk. IYR added a second position. That's the one I wanted rather than, if you compare these, IP was a lot more orderly. So I felt, let's take 3 on that one. But IYR with 2 positions and being a runaway train, yeah, I like that one better. We'll see how that goes. KRE, this is the regional bankers. I'm just committed to holding that one to see if it can break down below the below 41. It made one good run at it today. I will either get out of this when it comes through the dragon, meaning I'm either out like right here to preserve this gain, or if it breaks below, I think here, I can add a second position. So this little yellow zone right in here, that portion of the yellow zone is the only place where, what are you going to do? You're going to fish or cut bait. McDonald's, this was that, I'd fallen in love with these guys. Still love them. Got the 2 positions early, had a grinder. And then this has been grinding here. The only concern I have is the PSAR flip occurred. And so I am reluctant to short that because this has been so strong. I would like to get long this, though, at 201 or 291. I want to get long there with a second position here. That's really what I'm liking to see. So we'll see. Reluctant to short that. Yeah, like if that starts getting weak and I would want to short it, I would rather go find something weaker to short. And here's an example of one, like Merck. Today, I was lucky and prepared, therefore. We had this one, and it closed well, and then it gapped down to here and was falling, so just covered for 2, and then missed completely the 4R or 5R move. It closed poorly after this little rollover. This is one where if it goes below 113, look out below. Marijuana, sideways grind, no trade. Clean Energy initiated the short at the open, holding 2R. Rivian, sideways chop, no trade. So I've been trading directly in the S&P, and that actually helps me with my market timing. Remember, I had talked earlier this week about the potential for this turning point, and that led me to this collapsing dragon and a second position on the intraday failure. And yesterday I just covered because why not? And then today it sold off, hit the PSAR, started to fail. Tight risk, 3R, no overnight risk. That's how I play the index. Treasuries, on the other hand, have completely missed. I completely missed the sell, the base, the COTA 2 twice, and now the rollover. So this is, I think, below 107.75 is a potential short. But I find the equity index is easier. Treasuries in the futures for the aftermarket, this just has much larger gaps than the broad indexes themselves. I think because it is such a singular asset class that trades 24/7. I am reluctant to swing trade that one. But I do notice when it's making turning points. Tesla, you're just killing me, dude. Fanboy tried to go long, took a 0.5R loss, couldn't play it short. But if it breaks below 153.60, they are in serious trouble. They went below 500 billion in total market cap, and they're starting to sweat. Finally, U.S. Steel, one of our favorite traders. So yesterday, excuse me, this was the COTA 2 effort. It closed well, but it gapped down for a -3. We put the revenge trade on it yesterday, and it closed poorly. Today, added to the collapsing dragon, added to the collapsing dragon, and then covered the whole thing so that I could just get out of there for sanity. So 1, 2, 3, 4, +5 on the first one. On this one, it's +3, and on this one, it's +2. So that's 10R to offset the 3R loss. So, so net 7 on that whole cycle. Hey, in the chat, remind me what the acronym RUST now means. What was the R? Reason. What are their reasons or their rationality? U was the urgency. So why do they want to buy or sell? What are the reasons it could be? What is the sense of urgency they might have as indicated by price action? That's another way of maybe looking at volatility to get a sense of either exaggerated urgency or the absence of urgency and complacency. So if you look at super urgency on some spectrum or continuum, and over here was abnormal complacency, this is where you get shocked and surprised. This is where it's already in play. And this little period in the normal is where it's just oscillating in volatility. But this is also part of the secret of the sniper for being. And then signal, thanks Tucker. What is the trigger? What would be the triggering mechanism? You're looking at the chart and you say, as I look at this, where is the price that they must buy or they must sell, or that my inner sense says I have to be long or short? That's the idea behind green, yellow, and red zone, by the way. And then timing, what are the time frames and all the different ways we might think about time for that trade to unfold? So rust. You were here at the birth of a new acronym. All right. All right, so we've got a symbol. And here's how it closed yesterday inside this nice, tight, last 30 minutes. So this is all on 3-minute bars intraday. And this is the close. So the open comes in gap up to here. It gets as high as here and as low as there. And then the next bar, it takes out the high of the opening range 3 candle. So consulting our lookup table, there's my standard risk box. And because that's the MMRB, how many of those are there to the north if that's the R10 minimum manageable risk box? How many of those to the upside before we get to the maximum reasonable intraday move? Yeah, +9. Because the definition of the max reasonable intraday move is, wait for it, the range stat, which is the standard deviation of the range of the last 30 days plus the average range of the last 30 days. That equals the range stat. Why is that the maximum reasonable intraday move? Because if you looked at the last 30 days and you said, here was the minimum move, and here was the maximum move, and here was the average daily move from low to high, and then you put a standard deviation box around it of +1 and -1, it turns out that 2/3 of the time it moved this far, and only 1/6 of the time it moved this far, and 1/6 of the time it moved beyond the range of normal. So if I start off the day and say, if the start of the day is simultaneously the low and the high of the day, then it can always move a reasonable move in either direction. So my playing field for that day is the maximum reasonable. What's the maximum reasonable amount that it could move before I'm entitled to be surprised? I say, by definition, it's this: that you take from the zero, if it didn't move at all, and you go out to the average +1 standard deviation. Only 1/6 of the time did it ever go farther than that, and I'm declaring, by definition, that is unreasonable. That's an abnormally large move, which means that the maximum reasonable, in other words, the maximum move that we could still call normal, is to average +1 standard deviation. So we call that the range stat. It's the average range of the last 30 days +1 standard deviation, and that accounts for about 85% of the moves of the last 30 days. So 5 times out of 6, it never moved farther than the range stat. Only 1 time out of 6, or about 15 or 16%, did it ever move farther. So that's what we mean by the maximum reasonable intraday move. And so if the range stat is that maximum reasonable intraday move, and we divide that by 10, that becomes our default minimum manageable risk box. So when I get a signal early in the day, a breakout from the opening range 3 minutes, and it's giving me an indication of upside movement, I just hold my nose and I put 1/10 of that reasonable move on as my risk. And that means that there's 9 more of these, 4, 5, 6, 7, 8, 9, that it could go before I can declare that's abnormal. Hey, what if it only moves 3 of those 9? Like it only moves 1/3 of that. I'm still getting 3 to 1, so I love that ratio. And then if it gives me 2/3 of that move, I'm really thinking about making sure I preserve that move, because I've seen 2/3 of the maximum reasonable move, and I only have got 1/3 of that left to go. So I can start using this conception to really understand the difference between normal and abnormal price action. Check or hold? All right. So standard risk box. Sorry. The drawing doesn't go with it. Whoops. Okay, so I take about a minus 0.8. And when it breaks below the PSAR, I just get short. And it's the same risk box, because it turned out that was one risk box away from my entry. So that's just like a stop and reverse, but I didn't take a full loss. Check or hold? Now, when I see that happen right there, my inner monkey, there we go. my inner monkey wants to come over here and say, hey, this thing did this, came back and started to fail again. Right at that point, boy, that inner monkey of mine wants to take a second position right away. But I'm only 1 hour in hand. So I just tell the monkey, noted. And not now, but possibly in the future. We will study that. I promise that we'll study it. So quit bugging me. And he gets his banana and he goes home. It turns out that it retraced, but then reversed right away again. So I put it right back on. 6 minutes later, check or hold. Micro gain, stop and reverse. Now we're about 90 minutes into the day. It's had 2 legs down. This was kind of an orderly reversal all the way to here. So I held on as long as I could until I had to get out of it in order to preserve that portion of the win against that much risk. Check or hold. But because it had 20 minutes to fail and it didn't, I just put that risk box, and it's the standard risk. Check or hold. Okay. Basically, scratch, stop, and reverse short. Now this feels like what kind of a pattern would we call that to the downside? Caught a 2. If I want it to wait for a collapsing dragon, I got to come to here, which is where the R10 bottoms out and the PSAR flips. If I get an entry south of that, then this is a CD. This is a front run of the CD, and I'm betting on the fact that I have a high and a lower high, and the primary move was down. So I'm front running the CD by taking the Kata 2. Oops. Sorry, K2. Good boy. Won't you please let me just grab the box? The mouse is acting silly right now. Sorry. There we go. Now, this would be a Kata 2. I could see that as even as a collapsing dragon. caught a 2 or collapsing dragon. And then a cover. So as we total this guy up, we would say from this position to here is 1, 2, 2.5. This one is about 1, and this one is about nothing. So that's about 3.5. Scratch, scratch, plus 1, minus 1. So about 3.5 for the day. Check or hold. All right, here's some coaching I want to do on the charts from the gang that has to do with MACD histogram. We're going to see their charts in a minute, but I want to hit these in direct sequence. So here is this is in DIA. So he's got a short, and then he quickly covers. What I want you to notice, look how bright and beautiful this Red River is, and the orderly roll. This is where it just started to break into the winter and left the Red River, and you get that amazing move all the way to here, which doesn't get you out until essentially the PSAR flip. So we should be short from here the whole way down. And then when you see the Z3 break, you could even add a second position. And your risk box on this is only going to be like that. So your move should be about to here, which means that you should be able to get almost 4R out of that move. And now I want you to notice it moves into the spring, into the Red River here, leaves the Red River there. So right around in here is about where we want to get long. And this is all spring until it gets above this line where the summer begins in the chop. And then it goes summer, fall, summer. That is such a huge buy signal. And a Z3 pinch, you should be crushing this. And then taking this as a second position and then exiting here. And this is when that move is done. It's north of the Red River and comes back to the Red River. That move is done right here. Notice that the move occurs with a expansion of the Bollinger Band means. When those moves are done, you get a compression of the Bollinger Band means. A compression and then maybe a breakout. In the same way that when these runs are done, you get the compression and then a super pinch, and then this breakout is must see TV. What I want you to do, if you're the new guys in the sound of my voice, is put the MACD histogram on there, and then take where your buys and sells are and bring it down and see where it hits on MACD to see where your timing is with respect to that very good oscillator. And then I want you to start looking at this oscillator and say, where are the indicated entries, long and short, based on the 4 seasons? Like, I need to be short here. What's price looking like, and how come I'm not short? And I should be covering my short somewhere around in here. Why am I not covering my, or what happens when that signal goes? Oh, it coincides with the PSAR flip. Every freaking time. And that helps you define the size of your risk boxes. So you got this thing on your chart. Let's start using it and add that to your coaching charts if you want to be coached. If you don't put it on there, I just assume that you're just posting the charts for the record and that you're not actively seeking coaching. That's how I'm going to interpret it that way. Now, here's This is the NASDAQ, so this is the Qs on 3-minute. I want you to notice that the summer rolls up into the fall. It enters the river here, comes down and holds, does not go into the fall, but goes summer, fall, summer. Both of these are high priority signals to go long. And look what you get. PSAR flip, emerging dragon. And this might get you out if you wanted to just cover. Nothing wrong with that. And now notice how when things start getting sideways and content and complacent, the Red River gets really narrow. And now look at this. This breakdown from fall into winter, that's the hugest short signal you ever saw. All the way at least to here on the first leg. And the PSAR was your reliable guide all the way down. And then it goes winter, spring, winter. Once again, that is the second hugest short signal you ever saw. It's also where the VWAP is crossed. That was such a signal to be short, you can't even believe it. And here's another winter, spring, winter. That thing there. So that whole move is anticipated and timed with the MACD histogram in conjunction with these turning points in the MACD, or in the PSAR, excuse me. This never flinched until it got down to here. That's how good the PSAR tuned to the RL10 is. You need to learn that lesson. I want you marking up your charts like this so I don't have to. EWZ. That's the end of an era. You know, the end of the down era that started here, winter, all the way to spring, and now it enters the Red River on the upside. That means you can start buying swing, intraday swings, intraday long positions when the spring goes into the Red River, and when it comes across the zero line into the summer. Oh my God, is that good? Look how the thing changes. Now, stop looking at so many charts. Pick one or two and crush them. So we should be long here and probably exit and probably re-enter here. As soon as this reverses and gets out of the dragon, you're long here. And as soon as it doesn't follow through, you scratch that. Here's the next big signal from summer, fall, and now it goes into the winter. Oh my gracious. First leg. Here is winter, spring, winter. That is the best signal in the 9 known universes. Crush. And then here it's done because the winter now started to get flat, and that's a beautiful exit. Where am I getting short here? Well into the winter. So this is where the winter started. Right there. You could be short here. And then it's almost done, like right there. Good exit. You could be long right here, according to this theory. Yes, you could. Somewhere in here. Probably scratch. Probably re-enter. And then exit here. No reason to be short that. What you want to be stalking is the fall turning back into the summer. Wait for it to get below this after that nice little run up. But now, after a period of 90 minutes of nothing, it just went into the winter for the first time. crush it short. Winter, summer, winter, spring, winter. That's your second position. Winter, spring, winter. That's your third position. We should have 3 positions short on that, and then you smash that for about 15R. Look at the MACDs. Trust the PSAR. Look at that PSAR. It flipped here. That's telling you what side of the trade you want to be on that side of it. Oh, on this one, you want to be on that side of it. As I said last night, we are using the R10 as the data, and we're using simple moving averages of the RL10. We also showed last night that the difference between just price or the RL makes smoother lines, but the price with SMAs are still pretty good. But the RLs are the RL10 as the price proxy is smashingly good. So when you see the to explain that, MACD histogram needs a price parameter, and then it takes a 10, and I'm using a 10 and a 30 SMA of the price parameter. I'm using the R10 in lieu of price because that's very smooth, and then a smoothed average of a smooth price is a very smooth signal line. And then there's a 5-period moving average of the signal line itself. Okay, we explained that one last night. Now, okay, so that's what I want to say about the MACD. That thing is super good. I almost said it was very good. You know, was it very good or was it very, very good? Yeah, what's the difference? Hard to know the difference. All right, let's see if we can find the... All right, let's go back to the regular coaching note. I just wanted to make that point. Big gap down. He waits for the R10 to roll over. So that means all the shenanigans are over. He's just waiting for the morning hook. Crosses the baby dragon. Gets a 1, 2, 3. Standard risk. 1.2. Just like downtown. He didn't get filled, and the spread was too big, and he didn't want to chase. But if he had been filled, or if he had chased and entered anywhere in here, that's the exit point. Here's a COTA 2, COTA 2, COTA 2, COTA 2. All of that works. Rising VWAP. More to come tomorrow. Stay on that one. I like this short because it's a collapsing dragon, and if that VWAP doesn't hold, that thing should collapse like it did here the next time around. He goes for the breakout of the river. I don't mind that. That's waiting way too long to exit. That's where we should be short. Oh, my bad. I'm sorry. Sorry. He was short here, covered here. I thought he was going long. He didn't go long. Gets the second re-entry and crushes. Each one of these is a potential second or third entry. So we could add 1, 2, 3, on your best day, 4 positions and then cover down here. But that's pretty good. Now we're just we're making sawdust here. What I need you to do is make these circles smaller so I can see with more precision where the entries and exits are. Um, that's a PSAR flip. Now, to be honest, your indicated stop would be typically to the bottom of the dragon. And then that gives you enough courage to stay in that trade from here all the way to there instead of having to re-enter. And that's pretty good because that gives you the Bollinger Band mean. And then we could be short right here. And here. And here. And here. What I need to see from you is a trading plan that says I'm trading these symbols, these patterns, on these time frames, and then I want to see you trade that. And then when you come back and coach yourself, I want you to notice other patterns and MACD impacts like I showed already. Because I'm feeling like you're just waiting for an urge to trade and then trading the first thing that you see. And so that is reactive rather than active. I want you to be active. I want you to be the actor, not the reactor. Now, having said that, this break right here is a collapsing dragon. If you don't take that, you notice it comes up to here, and then instead of going up to join the last excursion at the Bollinger Band mean, it fails, which means I should be short here on the collapsing dragon or here in the Kata 2 because I have a high and a lower high, and then here's my, like a pivot point. Right? So what I got to be able to do is see that pattern. And then this is that's the must be short, and you get this move. This move inside here that is the pocket. So if you get an entry inside here, you are front running the breakdown of the collapsing dragon. And so we would call that the Kata 2 entry in here. Whereas we would call an entry below that red line, that would be the collapsing dragon because it fell below this line. Check or hold. Oy, oy, oy. C3's pinching. Downward sloping river. Bottom of the RL10. You drew that line, dude. Draw that line. So there's your decision point. When this rolls over, so now remember, everything, if it breaks below this line, then this is a collapsing dragon entry. And then any entry inside here see, notice how this has already had higher highs. So you're getting lower highs. That means on this segment down here, when that rolls over and you see this coming down, you're stalking that. If you notice that this area in here we call the pocket, from the peak of that lower high down before it becomes officially a collapsing dragon, we think of that as the pocket. And then this would, any entry in here is a kata 2 because you are front running the collapsing dragon. And then you'll notice that a brief pause, a rollover. Dude, that is the signal of all signals. As is this one. We call that one the little R10 wiggle because this thing is coming down. It briefly pauses and then immediately fails again. This is like you love that. And this one, the R10 wiggle. And then this entire look at your PSAR flip from here all the way down to here. Never flinched until that happens. So while that's occurring, you want to be on the short side of this trade forever. And now when the PSAR flips, you want to be on that side of the trade. And then you want to be on this side of the trade. So tons of fun. Now notice this. Oy, oy, oy. There's your PSAR flip marked off by the MACD histogram. You should be crushing that trade. Instead of looking at price, look at this. And look at the PSARs. Turn off the color code on your prices so that it has less urgency. Okay, this one's not bad. This is fine. It was a long slide. It bottoms out, crosses the dragon in here. About in here it hits the PSAR flip. Risk. And it stays in the river so you don't stick around too long. If this is going to work, that should be leaving the river here and going up to the Z3. So you gave it a speculative entry in the spring, but didn't stick around for the winter. So that's good stuff. Love this idea. So he's doing a 30 and a 10. So he's doing a fast and a slow. Sorry, this is the 10. So this is the slow and this is the fast. And he notices this thing comes in, crosses the dragon, and immediately starts to fail. Beautiful short, as it turns out. Which coincides with this short, which is a collapsing. That's not a collapse. Here's the high. So this would be the collapsing dragon entry. So that makes any entry in here a K2 because it's front running the CD. So that's not a reason to get out. We should be in that thing the whole way. So yeah, the use of the 10 and the 30 side by side is nice. What you'll notice is that if you're using the 10 for action, you could make this half the size and make this a bigger screen so you could see even more data in terms of screen real estate. Same trade. So you're in the river. You are in a range compression and entering right in the middle of the river. So that's almost always, if you can get out of that with a scratch, you're doing good. You want to find the movers. Now this is nice as an alternative because we've got the bottom of the RL10, and so he's got kind of a, if I can draw the line straight, this would be a CD. This is a Kata 2 because here's the peak, and now it rolled over, and he's got that whole move, and nothing wrong with holding that one. Yeah, self-coaching. Do you want to hold the overnight risk? If you do, sell 80%, keep 20%. But the only reason to do that is because you looked at the higher time frame, and there was a reasonable trade to take. Dan asked, do you wait for 1-2? If you want to, I would just take it. You're entering in a range, and it looks like there's an indication that it's failing. I've taken 1-2 entries for that matter. I mean, just get in. At some point, your risk box is so small, it's all noise anyway. So just get it, hold your nose and get in. Otherwise, you're making it too strict. Just get in. It doesn't matter that much. And I've already shown the charts on these. Yeah. Yeah, so here's what I want to say is these moves, when these moves are happening out here, you can't have been so busy that you're exhausted by this time of day. We got to be able to see that move and then the crossing of the VWAP and piling on. We got to get on those. You get great moves later in the day, not just in the opening sessions. All right. You will recall the argument I made this weekend about why we needed to be prepared for that because of this, and this, and that, and that. This is the least surprising move of all. There's your PSAR flip. A nice run up became the summer. Now it's in the fall, so you're on alert, and you got this rising thing. There's no reason to be in that market short of or below 412. And there's the all-important 400. If that fails, then that negates this entire move. And if that fails, it goes to here. Still bearish or bullish quiet, more weakness. Risk on is still allowing us to look at potential upsides, but more and more of the indexes are showing pullbacks that could be bought. So there's going to be some buying pressure coming in now that we've had 2 or 3 days of selling. So you want to get the selling early because it tends to dry up. So selling pressure usually looks like this. There was a crawl up the stairs and then jump out the window. 1, 2, 3, and monkey. And then when it goes up, it's quiet, 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 slowly growing. So you got to get early on the shorts, and you can afford to increment in with kata 2s. But that's why the CD is your friend, because when it collapses fast. You cannot use the same mentality and expectations on the short side as the long side. Dow tactical. I say Dow, but we've got some other symbols in there too, of course. Tons of auto framers. 7-1 in Cisco. Real weakness in like Pfizer, Tesla, and Texas Instruments. Strength in Microsoft and NVIDIA. Microsoft is winning the AI war, I'm telling you that right now. Clean energy just getting smashed. We're short. Lots of 10-day breakdowns. That's what it starts to look like when it rolls over. A lot of auto framers. Here's a couple raging Godzillas. Some very stealthy Godzillas. Alcoa is a Godzilla that's on the enraged portion. And these are all Godzillas that are super quiet. I think that, what that really means is their losses have been so big that it may just be that it's finding bottoms. Now, it could be, that would be hard sell off, and then the Z3 lines compress until it has a very nice, tight little box. And then from here, you don't know. Is it going to do this breakout and recover halfway up the stack, all the way up the stack, so you're looking at retracement lines? Or does it break down below this for the next leg down? So no matter what, if it's a tiny little risk box, then we're ready with our MMRBs for breakouts in either direction. Standard play. The number one standard play of all time for snipers. Intraday, 3-day, 9-day, that's what you do. Lots of big movers today. Some standard deviations, Z-scores greater than 4. This tells the tale of the tape in the based on NDX. All of that pain and suffering. Only Microsoft and Bitcoin. All the ETFs getting murdered, except emerging markets, blockchain, and a little bit of U.S. tech. Thanks, Microsoft. This is poised on the knife edge of a collapse. We've only had one day of a big VIX move, too. So there's plenty of room for this to fail. Watch, if it gets below 400, saints preserve us. Frog list for trading value: Tesla, marijuana and clean energy, NVIDIA, Intel, and Texas Instruments. That's telling you where the play is. It's the semis. All right, that's everything we got for today. Good work. We will catch you in